Hey traders, welcome back to another edition of the Market Review. My name is Vasily, I'm your trading coach and professional forex trader. For today's weekly edition, I prepared for you the discussion about the trading basics. Reading your comments, I noticed that many of you are looking for not the advanced trading techniques, but more like the beginner's guidance, beginner's strategist, and so on. So I decided to talk more about the proper drawings of fib extension and fib retracement levels. So I know that many of you are looking for the way to apply fibs in trading. I know that many of you love this tool and want to find the proper way to making predictions with the fibs. But you should realize that the foundation of the fib approach is based on the proper drawing of them. And checking the ideas on TradingView, checking the posts of different traders, I noticed that many traders apply these tools completely wrong. And I will show you how do I apply that, how we correctly draw the fib levels, and some other stuff. So please enjoy this video, don't forget to like this video, subscribe to my YouTube channel, and leave a lovely comment. Let's start. Alright, in order to understand how to properly draw the fibs and how to properly apply them in trading, we must get the logic behind the fib levels. Yes, it is very important for you to realize that if you want to become a consistent trader, if you want to trade full time, all the tools that you apply in trading, all the patterns, everything must make sense to you. You should have this meaning behind, the logic behind every action, every tool that you apply. Why? Because at some moment you will face the drawdown. At some moment you will face the losing streak. And no matter how good your strategy is, losing streaks are just inevitable. And in order to survive the losing streak, in order to keep staying afloat, the things that you use in trading, the tools, the patterns that you apply, you should have the meaning, the logic behind them. Yes, so let's try to get the meaning, the logic of fibs. So here just the random chart, I think it is the pound yen, and what do we see right here? We see here the price fluctuations, we see the bounces of the price to the upside, to the downside, and what is important for us to realize is that bullish impulses and bearish impulses, they are never infinite. At some moment the price always retraces, we always see the pullbacks. No matter what is happening on the market, no matter how important are the news that are pushing the market always corrects itself and the market always retraces. So here, based on that presupposition, will be based our fib application. So for the sake of the example, let's take here just the classic bullish impulse. Yes, they're just the classic bullish impulse. And as we just discussed, bullish impulses, they don't last forever. At some moment, the price reaches the high from where we see the pullback, the retracement, the trend violation. We can see different things, but the point is that the price suddenly changes the direction and we see the bearish move. Most of the time in the directional bullish trend, we see the continuation. Yes, at some moment the price finds some support, and from that support we see the continuation to the upside. At least the retest of the high and then the continuation to new higher highs. Yes. So the idea is that while the price is trading within the range of the impulse, yes, for us it is still remains bullish. Why? Because we treat the movement within the impulse as just the correctional movement, and we remember that this impulse determines the sentiment of the market participants and the market direction. Yes. So here goes our application of the fib retracement. Fib retracement gives us the potential support points within the impulse from where bullish continuation can start. Yes. So for that reason, first of all, we strictly draw the retracement, fib retracement, from low to high of the impulse, from the lowest point of the impulse to the highest point of the impulse, so that we could consider the entire movement within the impulse. Yes, so from low to high, if we talk about the bullish impulse, we draw the fib retracement. And here we have many levels. Yes, we won't discuss in details the fib levels here. We have many levels. The point is that from proper drawing, of fib retracement based on the bullish impulse, we strictly must consider the entire movement within the impulse. Yes, from low to high, we draw the retracements. And here with the fib retracement, we see the potential levels that can become the support for the market participants, and from where bullish continuation can start. Yes, this is the point. Why I show you all that? Let me show you the example. So let's take just the random example on the euro yen. On the euro yen here we have just a perfect impulse leg. Yes, we have here just a perfect bullish movement. Yes, we have a sharp bullish movement from that structure support. And based on that we will draw our fib retracement. So the most common mistake that I see with the drawing of the fib retracement is the selection of the points from where we draw the retracement. So what do I mean? Most of the time traders draw the fib retracement based on candle closes. So here on a daily we have the candle closes, and they draw the fib retracement based on this candle closes. When I ask them why they draw the retracement like that, they say that the candle closes show the most important impulse. Like within the wicks, you know, it is just the chaos, it is just not important for consideration, but candle closes give us the entire correct picture. But I have just a simple question. What happens if we switch the time frame? So if we switch the daily time frame to the 4-hour time frame, and let's check what we have there. Just imagine if we analyze the chart on the 4-hour. Look where are our candle closes. Here is our high, right? Much higher than it was on the daily. And here it is the low. Here is its low. Again, lower than the daily close. And you know, playing with the time frames, switching the time frames, you know, the candle closes are always different. You see on the hourly, again, we have different candle closes. So how do you select that? You can say that I just select on the daily, but you know it is not the answer, because you have the impulses on the hourly time frame, on the 4-hour time frame, and the hourly impulses can be noticed on the 4-hour time frame, and 4-hour impulses can be noticed on hourly. So it is a very hard issue to solve. It is a very tricky problem for us to solve. So to avoid that, what I propose us to do, I propose us to take into consideration the entire movement. What is the entire movement? Our entire movement is the movement from structure low to structure high. Yes, we take into consideration the entire move. We take into consideration the wicks. The wick here gives you the market low, the lowest point, and the wick here gives you the highest point. Indeed, these points are very important for the market participants, for the financial institutions, for the banks. Never neglect these points. I know that it is appealing to draw on the bodies. You feel like you do something different. You feel like it is like the next step of the analysis. But you know, in practice, we are trying to draw the retracement based on the entire leg of a move. And our entire leg of a move includes the wicks as well. So here how we will properly draw our retracement. And I want to remind you that it is the last chance for you to become a member of my premium educational group on a huge discount. Until Sunday, you can get the lifetime access on the 40% discount. It is so-called Black Friday sale, and if you want to learn my approach, if you want to master my trading strategy, and if you want to see how I trade live, it is just the best place for you to be. So don't miss your chance. All the links are in the description below. Just text me in one of the social networks. I will give you the instructions, I will give you all the details, and I will be happy if you become the member of our team. Same rules, same techniques we will apply with the bearish impulses. As we just discussed, bearish impulses never last forever. At some point the price becomes so low, so buyers start buying. and seller stops selling, and we see the pullback, the retracement, or a start of a new bullish trend, right? So here, while the price is trading within the boundaries of the impulse until it is trading below its high and above its low, we expect that at some moment the price will start falling and we will see the continuation to new structure lows, right? So here we apply the FIBs to identify the potential resistance levels within the impulse from where the bearish continuation will start. For that reason, we draw our Fib retracement based on the high of the impulse and low of the impulse strictly. Yes, so we take retracement from high to low, and based on that we start drawing. And here Fibs give us the potential levels from where the price can start falling. Yes, the potential levels of resistance. Yes, now let's discuss that on the example. Here we have the pound Swiss pair. On purpose I took lower time frame, not on a daily, so we could discuss the lower time frame impulses. And here you can see on the 4-hour we have the impulse lag, the bearish impulse lag. And right now the price is trading within this impulse. Yes, so with the Fib retracement we will be looking for the potential resistance levels within this impulse from where the price can start falling. Yes, so how do we draw the Fibs? Again, this common mistake that traders select the bodies of the candle for drawing the Fib retracement. Yes, so I underline here the candle closes, and just switching the time frame to hourly, look what do we have right here. Here we also see that impulse. We perfectly can identify this impulse, but look, the candle closes are different. Yes, the hourly high, the hourly candle close is here. The hourly candle close is here. You can see that changing the time frame, we have different candle closes, and you know which way is correct, which time frame is correct, which time frame is the most accurate. We have so many time frames, you know how to select one. You know, the best way for you is not to even think about that. The best way for you is just to take the entire leg, yes, to identify the high of the impulse, no matter what it is, whether it is the candle close or the wick, and the low of the impulse. And based on that, from high to low, you draw the retracement. With such drawings, I guarantee you that your Fib application will be much more accurate. With such drawings, I guess you can follow the classic Fib strategies. Yes, it is very important to be precise in that. And I guess the neglecting of the high and lows of the impulse is just disaster. Never do that. These points are the most important, so we just cannot neglect them. These are the most important points for the market participants. Alright, so here we had quite short lesson, but in my view it is still very important. So as you can see, our trading strategy, each and every tool that we apply, each and every pattern that we apply must be based on a very strict, precise rules. And here with the FIBs, you see how precise our rules are just for drawing. Here we even didn't talk about the application of the FIBs itself. We didn't talk how we properly apply them for the predictions. We just discussed how we draw them. And you can see even here we faced with the complexity, with the subjectivity. And you can see that trading is a complex thing. And each and every tool that we apply must be applied with the precision and with the decent logic behind. So I hope you enjoyed this video. For more education, for premium education, don't forget to join my premium educational group. Yes, as I told you, there is the Black Friday discount until Sunday, so all the links are in the description below. Please like this video, subscribe to my YouTube channel, and I will see you next week. Good luck, guys.